All right, welcome back, fail-safe investors. And today's topic is mutual funds. So, if you haven't already watched my video on how to diversify your portfolio, where I talk about mutual funds, index funds, ETFs, REITs, and bonds, I'll leave the link in the description below or somewhere on here once I figure out how to do all of this stuff, the info tab or something. But anyway, let's jump right into it. So pretty much how a mutual fund operates is there's a couple things you want to know before you even look into a mutual fund. So every mutual fund has an expense ratio, and since mutual funds are actively managed, meaning there is a person behind the desk somewhere picking and choosing these stocks and balancing out your portfolio for you actively, they have high expense ratios. So the average mutual fund you might find about 1%, so like 1.2 or 3, and anything over there might be considered high, but you can find some mutual funds lower than that. So pretty much how that expense ratio works, if you find a mutual fund with an expense ratio of 1.2, if you have $100 to invest, $1.20 of that $100 goes into the expense ratio, and that's collected annually, meaning once a year. So, other than the expense ratio, another thing that you want to look into with a mutual fund is dividend reinvestment, meaning that you want this mutual fund to be reinvesting your dividends. You want to look at the performance, see how it performed against the S&P 500 or Dow Jones, but usually they'll compare it to the S&P 500. So another thing is the holdings. So depending on what type of mutual fund you're buying, you want to look in the holdings, what companies they're holding, what's in the mutual fund, what's the perspectives of the mutual fund, like what are they, aggressive mutual fund, a growth mutual fund, value meaning long term, or a target date mutual fund. And what a target date mutual fund is, you can select a certain date of retirement, and the further out it is, the more stocks it'll have. And then when it gets closer to that retirement date, it'll start to sell off stocks and buy more bonds, because bonds are a little bit safer bet, meaning pretty much companies and governments don't default on bonds. Like a stock as a corporation goes under, you lose your money. But anyway, with the mutual fund, there are a couple pros and cons also, like with anything in life. The pros of a mutual fund will be, of course, you have the money manager, the person that's allocating the funds. One of the pros with the mutual fund is you do have a person that is actively managing it. And they also follow the stock market, they might follow an index, but they're also balancing out your portfolio daily for you. Another pro is rarely it happens on a short-term basis. You might have someone that can beat the market, but on a long-term basis, no one usually beats the market. So that's why I would recommend an index fund. Another pro is dividend reinvestment, meaning your money is continuously being reinvested for you. Another pro with the mutual fund would be some have no minimum investments, meaning you can invest $14, $10, $2 even. Another pro is long-term. They are good long-term investments. You don't have to continuously look at your portfolio. You can have someone do that for you, and they diversify your portfolio for you. But there are also some cons. So one of the cons with a mutual fund would be the expense ratio. Sometimes it can be too high. If you have $10,000 with a 1.2% expense ratio, that's $120 cut out off the year off rip. That's not that good, you know. So also another con would be minimum investments, meaning with some mutual funds, the minimum investment might be $5 million. I've come across some mutual funds where the minimum investment is $5 million, meaning you need $5 million to invest in this mutual fund just to get into the mutual fund. Another con with mutual funds would be they are open-ended trading, meaning that you can only buy or sell when the market opens at 9:30, or you could sell when the market, buy or sell when the market closes at 4 p.m. Eastern time.